All right, good day, traders. Welcome back to the Tier 1 Trading live trading room, New York session. How's everyone doing today? Duncan, I was going to talk dollar Canada today, but since you brought up dollar yen, maybe we'll go to dollar yen. Maybe we'll shift gears and do that for today's trade of the day. We can take a look at that. Duncan mentioned in the chat earlier. Very nice double top forming on the dollar yen, 60-minute oversold and some nice divergence. Cody says, please don't, I missed the big one. Cody, you're not alone. I actually have a cool question I wanted to ask you guys. I want to talk about the news event coming out today because it's big. But let's start off by we can share in the misery, Cody, because here is how my week has been, or past 2 weeks have been with dollar yen, right? This is the reality of trading. So for you guys out there that think or are used to people just sharing their highlight reels and all the glory of trading, this is where it gets bad. So if you remember a week ago we had this, right? We had advanced pattern formation on dollar yen. Super excited about it. Not super excited about it, but a good pattern formation. We had some issues with overlapping structure. Of course, price went to our overlapping level of structure right here, stopped me out, and then retraced. And then you remember I fired back with this, and this was the trade I was excited about because this was not only an advanced pattern formation, but this was one where I was looking for a home run trade. Why was I looking for a home run trade? Well, for 3 reasons. First 2 reasons are starting with technicals, right? Bull Gartley, so it was already a trade that I needed to be in. It was a bull Gartley that came after a violation of structure. You guys know my philosophy on structure, right? After we violate a previous level of structure to the upside, my prediction is that we are likely to continue higher, right? So I had a technical bias on it already. In the background, this didn't really play too much of a role, but we've been speaking about this for the past month or so. Big bullish technical bias on dollar yen, or fundamental bias, on dollar yen. Just from a very basic standpoint of the yen is saying that we are going to keep interest rates low, although there has been talks about kind of manipulation and whatnot, maybe more so threats. And the dollar drastically increasing interest rates, right? So from a fundamental 101 perspective, right? Strong dollar, weak yen, buy, right? So everything was lining up. And you can see that we did exactly what we thought we would do. We went up and hit 139s. There was just one little problem. One little problem. What do you guys think that little problem was? It got me. It got me. Stopped out right here, guys. 136.48 was my stop loss. Can you believe that? Stuff from the movies, right? 136.48 was my stop loss, and it pinged it. I wonder if it was watching my live session. And then rolled up. This one hurt. I don't get you guys. Many of you guys have known me for years. You have rarely ever seen me get emotional or talk about getting emotional over trades. Typically, I don't care, right? No single trade ever makes a difference. This one hurt. This one hurt. And I tried to get into it yesterday again with the higher high, higher close in the 4 hour, but we talked about the risk reward not working. This one hurt a lot because I don't get a lot of home run trades each year, usually a handful at most. And this would have been a big one. This would have been a big, 200 pip winner. So for you guys that are new, and you think that the world is against you, that it only happens to you because you are a new and underexperienced trader, guess what? Happens to the best of us as well. So let my misery bring you confidence. So we'll talk about dollar yen, right, in a little bit. But I want to start off with 2 things. I got to get the news out the way because it's important that we talk about news, right? We do have some major news coming out again today. We did have some shakeups in the market yesterday. We were watching the CPI report live. We were out of the live room with the Bank of Canada rate statement, but Bank of Canada did what Bank of Canada typically does. They gave no Fs, right? Bank of Canada, this is one of the reasons I love doing home run trades on Canadian pairs, by the way, but the Bank of Canada does not care. They will. What is the thing? They'd rather ask for forgiveness than ask for permission, right? A lot of central banks out there will kind of tease you and make sure they kind of have permission to do this and do that. Bank of Canada does what they want, and then they say this is why we did it. And if you got a problem with it, so what? So we already thought there would be a bigger than expected rate hike. We thought 75 versus 50, and our fundamental calculators did end up adjusting to that. They ended up increasing by 100 basis points. And now, who do you think that puts pressure on? Especially with a a massive CPI report yesterday from the dollar. That puts pressure on the dollar. That puts pressure on the ECB, yeah. And now the percentages that, hey, I think we have our rate hike next week, I believe, in the US. The percentages that our rate hike may go from 75, which was pretty much locked in, to 100 are starting to increase. And you're starting to see the market respond to that. That's why you're seeing these massive bullish actions. Now, one thing that may either fuel that flame or slow things down is today's PPI report at 8:30, and that's why it's so important. If we get another hot number, no doubt that is going to most likely put a massive amount of pressure on a 100% or 100 basis point interest rate hike. Most likely. If it doesn't, we may see some relief. So it'll be very interesting to see what that does. So that's our news coming out today. 8:30 is what we want to be aware of. I don't think you necessarily want to trade during it, right? If you guys saw the whipsaw that happened yesterday during our CPI, you'll know exactly why. But keep that in mind for what's going to set up your future trading plan or trading opportunities. Now, before we get into the dollar yen, I want to ask you guys a question. I'm probably not going to lend my opinion on it because I don't really feel like it. You guys know my stance, but I would love to hear what you guys think about this. And before I do it, I know you guys are very passionate, right? This message is not from a troll. It's not from anyone being negative, right? So don't go attacking and being angry and stuff like that. You guys get protective, I know, and I love it. Thank you. It's good to have a protective tribe. I'm just putting that out there. Not a troll, not an argument, not anything, just a discussion I had with a trader who was somewhat familiar with us. And I want to know what your guys' opinion is. And it came off a video where I guess I mentioned what I look for as far as return on investment. I always say, hey, my goal is to be average anywhere between 2 and 5% a month, right? If I average 2% a month per year, it's not a good year, but it's not something where it's like hang up trading, right? Anything under averaging 2% a month, you should probably hang up trading and just, invest your money in an index or something like that, right? Because it's going to get the same result, if not better, and it'll take up less of your time. If I can average 5% a month, that's a great year. That's a fantastic year. So that's always been my stance for many, 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 many years. Aside from those weird years where I thought I was going to be a millionaire in like 2 years of trading or 1 year of trading. So that's kind of some background information. But the comment said this. Now I'll read kind of the highlights of it. 2 to 5% a month. Are you serious? Maybe it would be more informative to see what your risks are being returned. Perhaps you're killing it, blah, 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 blah. At any rate, at a full-size risk of 2% a trade, we would expect to see 2 to 5% a day with a max drawdown of 6% a day or something like that. Perhaps you're talking about large swing or position traders, but for a day trader with a modest account, to be returning these sorts of numbers would be a mission that a strategy needs looking at and needs to change completely. And then I responded with some stuff. And then there was another one where it says, like I said, if you've got a huge account, then that's fine. But it's a small amount for traders growing a small account. I'm amazed, frankly, anyone would bother if they're just starting out. Is this really what you tell your day traders with a 5K account to expect nothing more than a 50 to 100% return a year? Again, I'm not going to get into it because you know my opinion. I'm going to sound like a broken record. But I would love to hear what you guys think of that. And again, it wasn't a negative, wasn't a negative comment, not a troll. Wasn't a troll. Put that out there. Jerry says, honestly, I personally don't know because I was originally told 5% a day as well, and it didn't work for me. And that's I'm glad you bring it up, Cherry, because that's really what I wanted to get out of the discussion is the and I don't want to say anything's unrealistic, right? Because I've spoken to a lot of traders. I've spoken to a lot of traders on both sides of the spectrum. Some that have averaged 40% a year for 20 years and are completely fine with that. Some who have had, 500% years, really, really, really big years. And everyone is different. And everyone's definition of success is different, right? For some of you guys, you may look at if I told you, hey, if you made a 50% return on your investment this year, is that a successful year? Some of you guys would be like, hell yeah. Others would be like, no, they'd be disappointed. So, it's going to be personal to whoever is trading. The problem that I have with some of this stuff, however, is that for newer traders, like Cherry mentioned, is as newer traders, we don't know what to expect. And I'll give you a good example. I did a quick Google search and I just picked the first thing that came up. I said, I put in Google, I said, what should the annual return on investment be for a successful Forex trader? And the first thing that came up was this, and this is bizarre. Trade in the Forex market where it's possible to make more than 100% profits a week if you know what you're doing. Now, you take that with a grain of salt because it's like, it's possible. So you leave yourself an out there. It is possible, right? Anything's possible. You can make 1,000%. But then you get to this point right here where it says, blah, blah, blah. I myself figured out how the Forex market works, and then I made my own rules and strategies. And now I'm making, on average, 100% or more profits a week after taking the losses in the Forex market. Some of my profits were 100%, 200%, 400%, 900%, and 4,600% within a week. I'm going to slow that down in case you missed it. Some of my profits were 100%, 200%, 400%, 900%, and 4,600%. Not for the year, not for your career, within a week. But he does say that was a one-off time. And if you're someone new, that is like Cherry, and you're Googling stuff because you don't know what your expectations are. You're just trying to figure stuff out. So, you asked Google, right? Same thing with I see all this, I know a lot about nutrition and all that same stuff. You see all these crazy things about diets out there. And it's like, man, they're clearly spreading false information. But if you don't know, you don't know. And you got people following this dumb stuff where it's like, detoxify your body by doing this. And it's like, no, you don't, whatever. It's tough. And my biggest thing is, me, I've never cared what people make or what people want to make. That doesn't really matter to me. I just care about my own personal returns. Like, I don't care about what someone else is making. I don't care about what people think I'm making. I just care about what's in my bank account at the end of the year. But it does bother me with comments like the last one, where you create this false expectation because it sets you up for failure. And I've seen this time and time again. I've seen so many successful traders who are trading really, really good, and then they quit because they haven't made 100% in a day. And you're telling them, like, dude, like you're just keep chipping away at it over time. You're gonna have a heck of a year. Like, you can have like an 80% return this year if you keep doing this, like 80%. But yeah, I should be making that in a month. And you see people ditch things that are really, 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 really good. It's kind of like that meme or that infographic where the guy is digging underground and there's two holes or two tunnels, and like one guy is chipping away towards like the thing of diamonds, and the other guy like turns around where he's like one chip away from it. You see that all the time, so it's interesting. But going back to the original comment, yeah. Some of your responses says, Cherry says, isn't it impossible to be profitable 100%? Well, he was saying he makes 100% return. So not a 100%, not profitable 100% of the time. The guy was saying 100% return. But it's interesting. And the point that I wanted to touch on real quick was with the small account, because you see this more, and I thought I did a podcast on this. I couldn't find it. But you see this a lot with small accounts. And one of the comments from the guy said, he said, hey, so how are your traders with $5,000 accounts, small accounts? How are they supposed to grow their account to the point where they can make trading make a difference? Because I think we can all agree, you make a 50% return off a $5,000 account, it doesn't really change your life. I mean, you make a 50% return off of a $20,000 account, it doesn't really change your life. But the thing that people don't realize is we got to look big picture. What you're doing is you're forming a habit. You're getting the ball rolling, right? If you expect to make anything life-changing with $5,000, then you're out of control. You shouldn't be trading in the first place. You should be at a casino somewhere trying to hit it big. The point is you are learning the skill. And you see a lot of people get with the mindset where it's like, I got to be super aggressive with a small account because I have to grow it as fast as possible. And that way, and then I'll get more conservative once I have a large account. Well, think about this for a minute, guys. If you were super aggressive with a small account, you're risking, let's say, 10% of trade, doing some, crazy leverage and all that stuff, right? And you're having success and you grew your $5,000 account to a $20,000 account in a year. Would you all of a sudden get more conservative and stop using what's been working for you? Or would you just be just as aggressive, just with more money? Right? Can we honestly expect people to be super aggressive with small accounts and then get more conservative? No, because those type of people that are super aggressive with small accounts, they're not risk averse. They're risk takers. And they're going to continue to make more risk because it's going to make them more money. So my advice was always this. You want to think big picture. You want to think to, how do I want to trade when I have a big account? And you want to develop those consistent habits with whatever account size you're starting at. And if you want to grow your account aggressively, you can do stuff. You guys have seen the money management spreadsheet, right? Our position sizing spreadsheet. You can implement an aggressive delta and grow your account faster that way. We like calling it an accelerator. But bigger picture, you need to supplement your trading account. And I won't go too deep into it because, again, I sound like a broken record. But while you have that $5,000 account, don't quit your day job. In fact, maybe get another job. Be an Uber driver, Lyft driver, Grubhub, right? Make some extra money. Tighten up your finances. Have a little extra in your savings, right? That you can dedicate to your trading account. So now when you make that 50% return off your $5,000 account, match that with another $2,500 that you saved from your odd jobs. And now you've got your 100% return. And then grow your account that way. Grow it by multiple income streams. You should be doing that anyway, but grow it by having multiple income streams. That's going to be a very safe way to accelerate your account, because half of that money that you're putting in isn't from trading. So there's never any risk to it, obviously, until it gets to your trading account. But that's always been my opinion. But everyone's different. Like I said, you have to define what your level of success is. If you're not happy with a 50% return a year, then you got to do something different. You can take more risk if it meets your profile, have more frequency, change strategies, do something else. It's up to you, but you gotta have a goal. You got to have a goal. So the tier 1 course really put me in my place. Yeah, it's interesting. And again, there's no wrong or right answer. The last comment I read, that was a 4,600% return in a week. That was the wrong answer, but it's all personal, man. Dungy says, I got stuck in the money phase of my journey early as well, and I found I was overestimating what I was capable of doing and spending money I had not returned. It was only after I went through our course, thank you, Duncan, that the reality of my journey became known, and I could see why I need to focus on building my skills rather than my bank account. I am now playing the long game as I want this skill set to replace my day job. So that is my focus now. My account size will come from building funds via savings. Yeah. And it's just a different way of looking at it. I think it's two different mindsets in a lot of aspects. We talked about this in the coffee break yesterday with psychology and are you going to hold yourself accountable and do stuff that you're not necessarily forced to do. I think when we talk about treating your trading like a business, this is the biggest separator. The biggest separator in business, and many of you guys are business owners, is, when you're growing a business, you're not taking a massive amount of risk. You're growing your business for 5-10 years in the future. You're not risking your business being closed down because most businesses are going to close down the first year anyway. So you're trying to survive and you're trying to have something that is solid and sustainable over time. And obviously it needs to produce you money, right? But you're not looking at it as a get rich quick scheme. You're looking at it as a slow, steady growth type of deal. Real quick over on YouTube. I saw someone on Instagram the other day saying that 20% a month should be the minimum, that if you take 10 trades a week with 50% win rate and average risk reward of 2R, that's 5% a week. And I was thinking to myself, are people actually making these type of trade returns consistently? And the key is consistently, because here's what I want you to do. And this is the easiest way I can put it. So take whatever that return is, right? So even take what was it, 2 to 5% a day, right? What does that equal over a year? What is 2 to 5% a day roughly equal? Because we know it changes based on your account size and blah, 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 blah. But what is that? That's like, what are we looking at? 5,000% or 400%? 400, 500% a year. So ask yourself this question, right? 400, 500% a year. And that's what the 2% a day. How many traders are doing that? Like, think about money and growth and how that works for a second. Think about what 500% a year is. Now think about 20% a month, right? 2,000% a year minimum. 2,000% a year minimum. If you're not making 2,000% a year minimum, you're wasting your time. I just want you to think about what 2,000% minimum is. And I want you to think of how your life would be if you were actually consistently making that. You would be the most wanted man on this planet or woman on this planet. There would be private jets and helicopters flying to your house, begging you. There'd be cars and girls and tigers and chocolates begging you to work. It'd be like the movie Swordfish, where they went and got that hacker. They'd give you no choice. Shoot, they might even kidnap you and force you to work, because that's how bad they'd want you. So, like, you got to be realistic. And again, it's they bait on people like that because and a lot of people aren't familiar with what money is, how money works, and what an actual, what returns in investment actually look like. And because we don't know that, it's easy to throw numbers at us and we're going to believe it. We're going to believe it. Duncan said to get 2% a day, how many trades do you need to take? You have to take something like 4 or 5 trades a day and have winners to cover your losses. That's the thing. And there's a few ways. So I was thinking about this morning, Duncan, a few ways you can get 2% a day, right? Let's say you're doing let's say you risk 2% a trade and you can get one win and just stop. Now, I tried that method before when I was a younger trader, right? My goal was to basically make 2% a day. And my plan was, once I got my one win, I would just stop for the day. And I would come in every day and just look for one win. So on day one, I came in, hit my one win, got my 2%, shut everything down. I was good. The next day I came in and I took 2 losses. Crap. Well, now I'm down. So now I got to find 3 more, 4 more wins to make up for those 2 losses to get back on track. And then that cycle continued. So on one hand, you could say come in, get a win, and leave for the day. Another hand, you got to capture your wins. You got to capture some of your bigger wins to cover for your losses. We all know that we're going to have losing streaks, right? We're going to have funks in the market where we take days where we just get, I think the trader said 6% max drawdown, where we get our max drawdown hit. We take 3 L's back to back to back, and boom, we're done. Right? Well, now to get back on track to average that 2% a day, right? Because we just took -6, right? Now we got to be up at least 4% the next day. So that means we got to hit a hot streak, right? So we got to outperform what our average performance is. It's you look at the realistic picture of trading. I think it prints a much better picture. And this is why I just did a podcast on this yesterday as well about that equity curve will show you what trading actually looks like, and you realize it's a bunch of ups and downs. Jason Greystone said this yesterday in the coffee break. Trading is 3 steps forward, 2 steps backwards, 3 steps forward, 2 steps backwards. And it's extremely difficult. Now, if you got a very high win percentage, that's a different story. But I would challenge people to, and this is why you do your testing, but challenge people to test it and see what a realistic return looks like for them first and foremost before hopping into anything with live money. Real quick, Cody says, exactly what most people can't deal with is those losses and how to handle them. Yeah, and when we talk about that, Cody, once those losses come, do you think people just keep trading? Oh, no, that's when you start doing the dumb stuff, right? That's when you start over trading. I got to make it back. Or you start missing out trades. Last 3 trades lost, so I don't want to take the 4th. And that's where you get into these psychological drawdowns that make your regular drawdown even worse, and then you blow up your account. Boss says 2% from 400,000 prop firm money? Question mark. I think I missed the initial question, boss. Can you re-explain that? That's awesome, calling you boss. But yeah, so I thought it was an interesting comment. It wasn't a bad comment at all, but I thought it'd be a good discussion piece because we always gotta. I think it is important to talk about this stuff, just to challenge your mind. You don't have to agree. You can disagree if you want, but I think if it at least tingles your mind and makes you think, then you can start going down that rabbit hole of doing more research that way. Boss says, I'm trading 400,000 prop firm money. Nice. Very nice. That's another thing with the skill of trading. You can take it to so many different places as well. We got Cody's a prop firm trader as well. We got a few of them here. It's been a good last couple of years. Real quick, Doug says, I'm interested in advanced trade management of rolling into trades, scaling into trades, getting bigger. For those trades, it makes sense to use that tactic. I'm reading and researching this, but now I know some way off. Yeah, I would say easier as a day trader. Much easier as a day trader, a lower time frame trader than a swing trader. Especially if you're in the Forex market, because we don't get a lot of trends, big trends. And your big moves like this, like the ones you see on Canada, very hard to scale into or add to because there's no pullbacks, no relief. However, you look at these moves on a lower time frame, all types of opportunity from 128s to 130. So I had a lot of success with that on not I didn't scale in or add. I never did that, but as far as multiple opportunities to catch those big moves, lower time frame I think is the way to go for you. But let's go to dollar again. Let's actually talk about some technicals. We are supposed to look at. We're still live on the live stream, getting an extended edition today. By the way, hit that like button, guys, if you can. Give me some props. Real quick, boss says no. FTMO is a scam. We've got an FTMO trader here right now. Cody says, scam. Why do you say that? Laugh out loud. I've gotten paid out every month. They pay, no scam. They are profiting from you failing challenges. Yeah, but that's every online prop firm. That's just the business aspect of that. That is every online prop firm. They're all profiting off of people failing challenges. That's why I said online prop firm, right? It's different than a brick and mortar prop firm. But here's the difference: a brick and mortar prop firm, they're not doing open invites, are they? So like we'll use S&B Capital for an example because we're good friends with them, right? You can't just you can't just walk up to S&B and be like, "Hey, I'm here." Like it doesn't work like that. Like you've got to go through either a different training process to them. You got to go through a job application process. So they are handpicking the traders that they're working with, and they're investing in that trader. So even if they're not going to be profitable in the first year, they see some type of promise, like a prospect. So they're going to work with that trader for a year, teach them, educate them, help them get them on track, and give them every opportunity to succeed. But they're not doing this with every trader off the street. So it's a different game. With the online prop firms, right? There's no application process. It's like, hey, we'll give you money, prove yourself. And they know that traders have egos. The majority of traders think they can do stuff that they can't actually do. Even the good ones are going to fail a couple times, right? Because a lot of these standards are pretty high. So they're making money off the failures. But I wouldn't call it a scam. I don't like that word scam. And I don't have any relationship with any of these firms, so I'm not defending anyone. But I wouldn't call it a scam. It's not a scam because they're upfront about it. That's just their business model. Their business model, and it's a great business model if you think about it, right? If we get 100 traders that take our challenge, we're going to have 90 of those traders fail. Probably 95. 95 of those traders are going to fail, right? And we're going to make money off of whatever fee, I guess it is, to take the challenge. I have no idea what the fee is. The 5% of traders that succeed, right? They're going to come work for us and help us make more money. That is a win-win business model. Do you guys see that? If they fail, we still made money off of them with no risk for us because we never actually gave them money. If they succeed, they help our business, they trade our money and help us make more money. That's a great business model. It's not a scam. It's a great business model. Now, a scam would be like Cody said, if you pass the challenge and like they didn't pay you any money. If they're like, oh no, we got you next month. Like that would be a scam. Or if like they folded up and you never saw them again. Like that's a scam. So I know what you mean. You probably didn't mean the word scam, but it's different than online prop firms are different than kind of your traditional prop firms, where there's more of an investment in the trader and the training of a traditional prop firm versus online. It's like, hey, we're casting a wide net and we're just looking for good traders. It's not their fault most of the traders that take the challenge stink, even though the challenges are very hard. But I wouldn't use the word scam just because I think a scam is when you're doing something dishonest, in my opinion. Dishonest. All right. Cody said they literally reimburse you the money once you make the list, your first withdrawal. Cody's like, wait a minute. I'm getting paid monthly. Come on now. All right, Duncan, let's go to your dollar Canada is interesting. We'll take a look at that second. We got a potential breakout on dollar Canada, which is interesting for some trend continuation. But Duncan wants to take a look at dollar yen. Let's go back to the dollar yen. And let's see where you're at. My business partner, Jason Greystone, was looking at this as well. I didn't get a chance to see the full video, but he was looking at a massive short here on dollar yen. Real quick, Philip says most traders are failing on prop firms because first they do not have profitable strategy, and those who do fail because time limit. Yeah, that's I think I'm not staying on this too long, but that's a very good point, Phil. One, most people don't know what they're doing. Two, the requirements are tough, like especially with the time limit. And in trading, right? You hate to say it, but you never know. Like you're going to get hot streaks, you're going to get cold streaks in trading, right? It's hard to do it on a very small sample size. So it's hard to be like, hey, you've got a month and you've got to return this because like it may be the middle of June and there may be nothing happening. there may be no volatility in the market, and if without volatility, there's no opportunity. So you just picked a bad month. Um, so yeah, those are tough. There are a few that gave a trader I worked with. He's doing a year long one where he has a year to do it, and he has a monthly requirement, but that requirement can come within any month as long as like the previous months weren't too bad. He has to stay within like a drawdown limit, but like even if he doesn't hit his requirement, he can continue to do it, which is a cool one. But yeah, the time limits are tough. And then there's all other requirements. Cody had to change his trading style because of stuff like not being able to hold stuff overnight or not being able to take a certain amount of risk. So you got, and you're going to get that in any prop firm though. So even a traditional one, you got to play by the rules. It's their money, right? If I were giving you my money to trade, please believe you play by my rules as well. So you got to make those adjustments, but those are the cool things that come with being a really successful trader is able to adapt, right? And that's the difference between a trader and a strategy follower, right? A strategy follower can do one thing. They can follow a strategy. As soon as that strategy doesn't work, they're asked to make an adjustment. They don't really have any other skill. They just follow a strategy. If you're a skilled trader, you can make adjustments where you can be like, okay, am I allowed to do this? All right, let's put the brain to work. Let's try this instead. And it's very similar to a professional athlete that can play different positions. If you can do one thing as a professional athlete, you may not last long because you may get put with a different coach who has a different philosophy. He may need you to play a different role. And if you can't do it, you're going to be out the team. So the players that last the longest are the ones that are adaptable and adjustable. I forgot who it was. There was this player for Leeds United. What was his name? Dallas, maybe? He played like every single position throughout the year. Every single position. It was weird. Always found a spot in the team because they can put him anywhere. All right. Finally to dollar yen. Oh, I'm sorry, Duncan, for getting here. Let's see what dollar yen's doing. Stupid pair. And my opinion is gonna be a little bit different than Jason's, simply because of where we're at. So let's take a look at dollar yen, and we know the fundamental bias between dollar yen, strong dollar, weak yen. There is that threat of yen manipulation, which you got to keep in the background, but they say that all the time. We'll see if it actually happens. The first question we want to ask ourselves is, where are we trading at? Are we trading at a significant level of structure? And we're here in the weekly bigger picture. And the answer is yes and no, right? We are at a structure zone. Now, within that structure zone, we're not at any significant point, in my opinion, right? I think we can certainly go higher up to 144s. I think we can actually test the highs here of 146s. So I still think bigger picture, there is room to go here in dollar yen. So we just want to have that greater perspective before we zoom down into our current opportunity. So we're looking at yen here. We're looking at, obviously, a breakout to the upside yesterday. I would expect more of the same, especially if we get a hot PPI number and we start banking on this bigger interest rate hike. Duncan said, correct. If you look at the monthly, we are at pin bar level. Yeah, and again, this is going to be the thing about perspective. Now, the question is, do you use the monthly? And this is going to be the ultimate question, because it's one of those things in trading where if we have a predetermined opinion on something, we can find a time frame that complements it. And especially if you're going from monthly to daily, maybe that's your natural progression. If you're going from monthly to 60, I don't think the 60 has anything to do with the monthly. Right? So we look at a monthly here, and we'll see it on the monthly. We'll see that monthly. I mean, even on the monthly, actually, monthly, we don't really have anything that scares me away, to be honest with you, Duncan. I haven't looked at this. Is my first time looking at the monthly. The monthly, I still don't see anything in our way. If anything, it gives me a clearer picture of 145s. So I don't know if my data is a little bit. Is this the same data you guys have? I'm looking for the pin. I don't see a pin bar here, but I could be. So I don't really see anything on the monthly that would scare me away either in saying that this is a reversal area, unless my data is a little bit different. But if anything, the monthly gives me a clearer view of 145 because it gets rid of kind of that consolidative junk and gives me the highest close or the highest close and an open of this red candle right here before we have our little rejection zone. Okay. Now, are you talking about the doji inside here? This green one? Yep. See, now for me, this candle doesn't have much relevance because of the candles next to it. This candle, so the same way it's like inside structure and outside structure, because this candle's inside, it doesn't really have any relevance in my prediction. Right? So this doji really, honestly, when doing my analysis, I didn't even look at it because it doesn't really give me any information. And again, obviously, these are just my personal opinions here. But this doji doesn't really give me any information here. Now, if we had a situation where these candles never formed and we followed that doji with something else, then yes, this would be relevant because this is going to be your swing point, right? This is going to be your point where the market rallies up and then it pivots off of it. But we had this doji, we continued to put in 2 bars afterwards. So this doesn't really, it doesn't do anything for my analysis. The doji candle there, for me, it's not a relevant candle. So let's go back down to the daily. And I don't say that to poo-poo your idea. I just give my opinion as always, guys. So let's go back down to the daily, see what's happening here. So daily, but feel free if you have questions about it, ask. I don't mind digging into it. I share my opinion. I don't want it to seem like my opinion is the say all be all. So if you have questions about it, feel free and I will answer. But that's how I see it. So daily, we have the breakout here. 4 hour, you're looking on the hourly, right? 4 hour, we got an inside bar. Who can tell me what an inside bar means? Our daily question of what does an inside bar mean? Consolidation, right? So we're starting to consolidate a little bit. Consolidation could be many things. Could be flag patterns, could be channels, could be high and tight flags. Who knows? We'll have to see. But it is a stall in the market. So the market has rallied up. We found a little bit of selling pressure at 139, even handle, no surprise there. And then we kind of fell back into this zone. Now, again, I think this stall is more related to another big news event coming out in 16 minutes, right? The calm before the storm. But in general, that's what we look at. Head down to the hourly, and then we can see more of that consolidation. So the market's starting to consolidate. Again, we're going to have a fundamental based move today, in my opinion, which will be a pop. I certainly think we can pop to the upside more. And I'm a little bit the opposite of Jason. I think there's still room for continuation up to 145s. I think we can continue this rally up to 145s, or at least until the fundamental kind of background shifts on things. Any questions on dollar yen? Let me know. 15-minute chart. Here's a clear look at that pennant pattern forming, that wedge. Ooh, you got 2 traders battling with the difference of opinion. Although I didn't watch Jason's full video. I just saw part of it as I was sharing it. Ali says, could you explain what's going on with the yen manipulation? So their currency is taking a beating. So the Bank of Japan is basically saying that if we continue to take a beating, we're going to come in and stop it. So we're going to value the yen versus kind of historically they've devalued it. So they're gonna come in and strengthen the yen. Is basically what the threat is. Oh, we got a late. Sorry, we here in the live stream just coming in. We only do one trading opportunity a day for the live stream, and then we kind of do the rest in the normal live room. So we just finished up our one for the day. So I apologize. Yeah, I mean, yen is they're known for doing that. Again, yen has been a very good pair for me personally in the past for home run trades because from time to time they will come out and just be blatant about what's going on. So again, years ago they were like, "Hey, we are going to devalue our currency." So I'm just letting you know. So when you know, I guess you don't know because you never had the full kind of backing, but when you're aware that the Bank of Japan is doing a certain thing, it makes it a little bit easier to kind of be more aggressive with your trades because you know, like the path of least resistance is a weak yen. So it makes it a little bit easier to be like, hey, sometimes we get those target levels where it's like we get a big target, like we could go there, but we probably won't. All during that time, I think it was like a 2-year period. We were just shooting for all big target levels, all the big ones, home run trades left and right. They didn't all work out, obviously, but home run trades left and right because we knew the path of least resistance. So it was a very easy time to be a trader, easy relative to how hard trading is. And in fact, that was my biggest year of trading. Now that I think about it, that was my biggest year of trading. So I think I had about 2 home run trades on dollar yen, 2 on dollar yen, 1 on dollar yen, 3 in the same year. Usually I get like 2. And again, home run trades are like big, like triple digit pip trades. Aside from like on normal pairs, not like the pound yen, who's like, that's a different one. But yeah, those, I'll tell you what, here's what, I'll tell you what, this is what, I was trying to find a good example of the equity curve. But yeah, if your equity curve looks like this, let me draw something out real quick. I'll show you how those home run trades help you. I never know where my drawing tools are at, guys. Never, ever. So if your equity curve looks like this is how my equity curve typically looks. It's nice and boring and slow. And then like we consolidate during the summer. You get a home run trade. Home run trade looks like this. And then you go like this again. So it doesn't look like much, right? We go back into a little consolidation, a little drawdown, then another home run trade. It doesn't look like much, but those massive jumps of like 5% at a time, 10% at a time, massive to your trading account. Because they're basically additions to the normal stuff you're doing. So if you're on pace to make 40% a year and you get like 2 random trades that bank you 10%, you're at a 60% year. So cool. Hey, George. Sorry, late to seeing you. Can't wait to have you back in the live rooms. We miss you. You always have some good questions here. All right, we're going to Cody. Cody says, yeah. So I stopped day trading, Cody, in during COVID, 2020, actually. Yeah, I stopped day trading. I do not have. I was still like a longer term system or setup, something on the daily. I haven't been able to achieve that yet, but that's the bigger goal. But yeah, I stopped day trading in the COVID year. What I did was I was like you. We both made some similar investments. I took my day trading account, I liquidated it and put it in the stock market. It was one of those opportunities I couldn't pass on. Me and you both had that investment in oil. And it was a no-brainer. And that day trading account was just, it was always just a fun account. Because I was never really a day trader before I started teaching. It was a fun account just so we can trade something live in the live room. So, and it was good for like, like cool stuff for the kids and whatever like that. But it was never the growth account. So I would always start over with the same amount each year and just cash out. So saw some better opportunities and did it. And yeah, I may be back. I miss day trading. I do. I don't miss the time investment, but I do miss the trades. So Who knows? Maybe I'll be back. So anyway, I'm rambling along. YouTube guys, trading view guys, thank you guys for joining me. Hope you guys enjoyed. Got a little long session today. I'll see you guys maybe for a weekend trading edge video. If not, I'll see you next week, Tuesday, Wednesday, Thursday, here in the live session. Hit that like button on the way out. If you have any questions or comments, leave it below. Live room members, I was going to go take a look at dollar Canada